diversifying into various other streams and upgradation of the assets also. And especially with regard to the assets and the real estate, which is lying vacant with various public sector entities such as the railways and ports, there is a distinct possibility of creating these assets, which can be then transferred to REITs, which will have to happen through some kind of development. And this would aid the future growth of the REITs in terms of the assets that are transferred to them. So this was in terms of the budget para 35. Moving on to the next para, which is the budget para 44 regarding the review of the foreign exchange management NDI rules. There was the extended deliberation on the various issues that foreign investors face today with respect to the challenges. Some of them deal with directly with the NDI rules and the regulatory environment. Some of the things that were listed out as the challenges included the regulatory uncertainty, which sometimes happens with respect to changes in the policies. For example, one example was given like online gaming. So there was a change in the policy stance, which affected all the investors who had invested till that time. The second was there was some element of tax uncertainty, especially with respect to the retrospective tax which sometimes comes in at a later date and which investors are not aware of at the time of investment. So in order to take care of some of the process complexities, it was suggested that we can have a single window clearance for all FDI transactions. And we have a detailed kind of a roadmap which was there for that. The pricing guidelines, again, which are presently given for the FDI transactions, were looked at, and it was felt that they probably need more flexibility in order to be able to become attractive for FDI investors. Provisions of the press note 3 and also the indirect foreign investment and the FOCC issues, which is foreign owned and controlled companies, was also brought up and discussed in detail. After looking at these challenges, we had some suggestions from the group, which are very noteworthy. Some of them included that in general, the regulatory and tax certainty may be maintained. And it was also appreciated by all the panel members that in the last 10-15 years, there has been a very good regulatory and tax certainty. But however, some instances were quoted as, some incidents which have created some kind of a disruption, which was felt that they could also be ironed out in the future. There was a requirement for a single window kind of registration process for FDI investment, which would probably need a lot of coordination and combination of the digital public infrastructure available for, say, the FEMA compliance, for the tax processes and the registration and other formalities with the MCA. So the entire thing was suggesting towards a digital onboarding process, which could help the FDI investors in going through a single window clearance for all their regulatory requirements, and then the investment process would be smoothened out. There was also a need felt that in order to look at the FDI and long-term investors, there's a lot of due diligence which goes into the investors looking at the investing entity. And in order to look at the compliance part of it, it was felt that there may be a window created in the existing firm's portal, which is a reporting portal for FDI transactions, to check for various compliances, which could be seen by prospective as well as current investors, and which could then be taken into account to decide the amount of investment and the time frame over which the investment would be made. With regard to the pricing guidelines, it was felt that there may be a necessity to have certain industry valuation methodologies which could be brought in to bring in flexibility. Conditions such as building for certain indemnities for contingent liabilities, for example, future tax liabilities which may arise on account of certain tax processes going on, could also be built in. The deferred payment part, which is currently, fixed at that, 25% can be retained and be paid later on by a foreign investor. And it would have to be then paid within 18 months, was also looked at. It was felt that threshold could be increased, and the amount of time also to bring in the remaining amount for the deferred payment could be increased to bring in more flexibility, because it was felt that sometimes this money comes in and the due diligence process is going on simultaneously. There is a requirement of the foreign investors to show their commitment as well as their due diligence processes to take place. So there may be a requirement for more flexibility in the deferred payment part. In terms of the requirements for the neighboring countries under PN3 and indirect foreign investment, that is under the foreign owned and controlled companies in India, it was felt that sectors which have 100% automatic route for FDI, there could be some kind of relaxation in terms of the applicability, and investment up to a certain threshold, like say 26%, could be allowed without a kind of prior approval. And then it would also have to be ensured that in order to prevent an arbitrage which may arise, because there would be subsequently investments at different levels which could not be in line with the FDI policy. So that commitment would have to be taken from those entities, that any downstream investment they make down the line in any step down subsidiary would not be into any prohibited sectors or sectors where FDI is not allowed under the 100% automatic route. This would ensure that we don't have any kind of arbitrage. At the same time, it would bring into a lot of ease of doing business for entities who have already invested in 100% automatic route, and which are also investing downstream in a similar fashion. There was a need to define beneficial ownership in the same context. Currently, it is not defined in the India rules, and we need to probably define that so that there is clarity with respect to the applicability of the neighboring countries' criteria. There was also felt that distinction could be made between ownership and control thresholds, because ownership would still not, may not transform into control. So the thing is that if there is control, then a stricter definition could be used, and a stricter compliance requirement could be made for entities where the ownership and control both are present, and entities where only ownership is present. There could also be a provision to have a time-bound processing and transparent process and procedure for taking care of the approvals which have to be taken, specific approvals under the NDI rules. So these were some of the suggestions by the committee. Moving on to the next proposal, which was para 47, the PROI investment in line with what is already existing for NRIs and OCIs, and also with respect to the increase in limits. This was also discussed, and it was also found it is a very attractive destination. India is a very attractive destination for HNIs. They would like to invest without having to go through a process of SEBI registration as individuals. And there was a roadmap which was drawn by our panelists, so which basically included that they should be allowed flexibility of not only having an INR account, but also foreign currency account, which would be in line with what NRI OCIs are currently doing in terms of the NRI account that they maintain for investments. There would probably be a requirement to clarify on the tax part also, and try to bring a parity between the investments which come by the PIS route, which is the SEBI registered FIIs, and also through the PROI route. There could be some kind of a parity which could be brought in to increase their interest. There should be ease of onboarding. It was discussed among the panelists that at points of time, it takes a lot of time for the KYC and onboarding to open a demat account. So those processes should be harmonized, and they should be simplified. Possibly with some jurisdictions which are FATF compliant, there could be a mutual recognition of KYC, so that the KYC does not have to be repeated by customers who already have a track record with their bankers in their home jurisdiction. There was also a requirement which was felt that there could be some alignment. There are some SEBI guidelines which would also require a slight amendment to take care of this particular recommendation while implementing. Moving on to the last para, ma'am, which is the budget para 45 for market making framework and total return swaps for corporate bonds. This enthused a lot of interest, and the panelists had a lot of great ideas regarding how the entire thing could be initiated, what should be the roadmap. The suggestions were in the form of, the possibility of a central counterparty system, which could ensure a guaranteed trade settlement, an anonymous online trading platform similar to NDS Home, because this is something which has helped in the GSEC part of it. DVP3 mechanism, which could be implemented in phases for the corporate bonds too. Standardization of the corporate bond maturities, which could help the investors to choose. And SLBM introduction of ETF creation and tracking error reduction, which could actually help portfolio investors investing in corporate bonds in a big way. And also looking at the differential capital charges for market making versus proprietary trading, and a collateralization of inventories, which has probably helped in the GSEP market to create liquidity. Looking at these various suggestions, the roadmap which was identified was that we should be able to identify well-capitalized market makers, which could include primary dealers or NBFCs and other stockbrokers, or basically bond houses, who could actually keep a warehouse, and they could create a market making activity for the corporate bond market. The ARCL funding scope could also be extended beyond the current limit. there could be a tired credit appraisal requirement, so that those people who are holding it as market makers would have a more liberal kind of credit appraisal requirement, so that it would help market makers in creating a warehouse and also acting as a market maker full time. The rating agencies may be also some kind of changes may be required to encourage the MSME access to the corporate bond market, and also to increase going down the credit curve and creating a market for junk bonds in India, especially with respect to the kind of international experience that is there in terms of junk bonds and creating a corporate debt market for them. The security trustee arrangement could be strengthened with adequate fee structure, and a retail participation incentive could be provided through some initial tax benefits. So these were the things mentioned, and this is the end of my thing. And thank you so much, ma'am, for the time given. Namaskar.
Thank you, Dr. Gaiya. Ma'am, as you would have also noticed that the group has said, Dr. Gaiya mentioned that detailed roadmaps have been made, a snapshot of which was shown to us. We look forward to receiving those. Now we come to the last subgroup, ma'am, ease of living through tax reforms. We had about 7 panelists, other than the 2 who are the experts who led this and helped to anchor the discussions. Mr. Arpan Agarwal, Client Engagement Director, Government Business Infosys. Mr. Bijayanand Panda, Director and Head, Government Business TCS. Shri Preetham Banerjee, Professor and Head, Center of WTO Studies. Mr. R.I. Bakht Singh, Head APPD, BARC. Mr. MP Vijay Kumar, CFO SIFI. Mr. Akhilesh Ranjan, former member CBDT. And Mr. GC Srivastav, Advocate. With that, I would like to request Shri Dhuvgad, who's making the presentation on behalf of the 3 anchors who were leading the discussions on this group. Please start. May please start, Mr. Dhruv.
Yeah. I think Mr. Shekhar, this is yours. Take please, okay. Your module.
Thank you. The presentation is not coming here.
Oh, we are able
Good evening,
to
ma'am.
see it.
Thank you so much. Yeah. Good evening, ma'am. Thank you so much for the opportunity and time given. This group debated on 3 important points from your budget speech, ma'am. Para 106, automated lower and nil withholding certificates. Para 111 and 112 of Honorable Finance Minister budget speech. Foreign assets small taxpayer disclosure scheme, and integration of ICD, Indians and ICDs. These 3 parts, ma'am. As far as the first part, ma'am, automation of lower and nil withholding certificates. This is intended for these taxpayers as per the budget speech, ma'am, and it is very, very welcome measure. And the objective of this entire discussion is that how to make sure that the intended beneficiaries are benefited with low compliance cost and ease of doing business. That's the idea behind this entire discussion. So there are 3 points which the panel had a critical discussions, ma'am. Number 1, who are all the eligible beneficiaries of this automated approval? Because when we talk about a small taxpayers, who can be the small taxpayers? So the group discussed and then believed that probably a guidance from MSME Act could be taken to determine the upper limit of the turnover for eligibility. The eligibility for those companies can be considered on the basis of turnover and the income of the applicant, and from the MSME Act, the guidance can be taken. However, for individuals who are not corporates or not MSMEs Act, probably an income up to 100 lakhs can be considered for the upper limit for the eligibility, ma'am. As far as the second one is concerned, the rule-based approach, the group felt that in the system, the applicant should be able to give last 3 to 5 years of track record in relation to tax paid, profits, current year profits, and advanced tax paid. And the basis on this, if the companies have consistent losses and the taxpayers have consistent losses, then the LDC can be given on a simple rule basis with minimal discretion. That is what the group felt. And third one is that implement comprehensive system and data integration upgrades. one of the important objectives is to make sure that ease of doing business and ease of compliances. Therefore, deep integration between TDS statements, challan data, and all the past ITS will minimize the compliance cost and compliance burden for the small taxpayers. This is on the first part, ma'am. Can you go to the next slide, please? Yeah. The second important part we discussed, ma'am, was that para 111, 112 of the budget speech of foreign assets of small taxpayers disclosure scheme. There are 4 important points which the group discussed. Number 1, what should be the additional tax? Now, of course, the finance minister in a budget speech, ma'am, you mentioned as additional tax of 100%. We leave it to your wisdom whether we should continue with 100% or less than 100%, because sometimes in order to bring more taxpayers into this, probably based upon the past Karadiva Samadhan schemes, a 25 to 30% of the penalty can be considered. That is what the group believed, ma'am. Of course, we leave it to your wisdom, ma'am, as it is part of the budget speech. Second, what should be the valuation methodology for the foreign assets? As per the fast disclosure scheme, fast DS 2020, there are 2 schemes. Number 1, in respect of which the tax was not paid and asset was not disclosed in the past years, then the valuation on the date of disclosure should be taken as the basis for this purpose. However, in respect of a second one where the tax has been paid, but asset is not disclosed, since the tax has been paid, probably the group believed that the valuation on the date on which the tax was paid can be considered as a basis for the disclosure. The third one also, ma'am, is there any way by which we can give the payments can be given installments address any genuine hardships? The group felt that any conditions that we are putting it across should be simple, not complicated. That's one thought that came. And then also, is there any way by which the payment can be made allowed in installment basis? That would also help the smaller taxpayers to come into it, because the entire objective is to attract the people who are inadvertently omitted to disclose the assets, so that it would attract them. The last point which we discussed the group, ma'am, how to leverage the automated system of information to advise employees. Because as a speech said, and also it is well known, that a lot of employees have got stock options and shares which was not disclosed. So the group felt that probably based upon the information that we get through exchange of information, probably we need to nudge the people, make sure that they get adequate communication and get information to make them to file. Also, probably continue with the employee reach out program by the employer without any penal consequences for the employer. That's one of the thought point suggestions that the group had, so that the employer can reach out to the employees and get it, ma'am. The last one, the most important one, ma'am, from this group takes on integration of ICDS and INDAS, based on the para 136 of the budget speech, ma'am. Indian companies are today going global, and also in the morning, Honorable Prime Minister also highlighted the importance of foreign investment and bond market. Therefore, the group felt INDAS, which is akin to IFRS, is acceptable globally, and therefore ICDS to be aligned with INDAS and INDAS not to be compromised. That's what the group felt, ma'am. The group felt probably constitute a committee representing professionals from industry, Ministry of Corporate Affairs, Tax Department, and professionals to align on INDAS to deliberate it. There are 4 important issues that the group discussed, ma'am. One, identify ICDS to be aligned with INDAS. Today, already we have 10 ICDS. Probably few ICDS may not be aligned with INDAS. So make sure that identify the ICDS to be aligned with INDAS. For example, revenue from construction contracts. That's one example we are just giving it, ma'am. Similarly, there are INDAS which are there, but not ICDS has not come. For example, leases, ma'am, that already a draft ICDS is there. We need to bring that into line with INDAS and introduce, ma'am. That's another one. And also, certainly, ma'am, as you may be aware, that it cannot be possible that exactly the tax profit and the book profit will be same. There could always be some differences. And after post-eliminate, if there are any differences, let the differences be addressed through a statutory amendment in law. And it is important to maintain a horizontal equity between INDAS and the AS. So the group felt that already there is a Ministry of Corporate Affairs is working on a program of upgrading the EAS to IND-AS to maintain the what we call horizontal equity. And therefore, that project should be continued and the project should be to little bit give a life so that the horizontal equity can be maintained. Also, it's important to maintain the support the smaller taxpayers who are not part of the IND-AS through this means also, and introduce the transitional provisions to make sure that the smooth convergence happens so that the taxpayers will not get impacted, particularly the smaller taxpayers will not get impacted on this. So this is the sum and substance of the discussion that we had, ma'am. And thank you so much for the opportunity and time given, ma'am.
Thank you, ma'am. Thank you, Mr. Shekhar. I would now request Shri Dhruv Garg to take us through the 3 provisions relating to the custom side, ma'am.
Namaskar, ma'am. Thank you for this opportunity. So the panel discussed 3 very critical areas of reforms which were established in your budget. One was on non-intrusive scanning. The second was on the customs integrated system and the baggage rules. On non-intrusive scanning, ma'am, there was a wide range of discussion, but ultimately quite focused in terms of bringing together, answering the key question of saying, how do we operationalize the non-intrusive scanning, adopt AI, adopt global best practices, and also make it indigenous? And again, the panel discussed multiple aspects around this, ma'am. And the key messages which came out were that 100% scanning is actually not just about hardware, it's about an ecosystem target. And therefore, we need to plan for just the scanners, the physical infrastructure, whether it's the port or the triport layouts, the digital backbone, standardization of procurement, SOPs, etc., as well as certification of operators to ensure that we are able to move on that trajectory at a fast pace. And examples around the world were kind of brought together on this part. Second very interesting insight which was brought together, ma'am, was that BARC, one of the panel members, was a part of BARC. They are already developing this indigenous technology which is ready for deployment. They've done an MOU with GNPA as a proof of concept, and that's would be something which will be focused upon in the next 24 months as we build upon it. Thirdly, ma'am, what came out was that there are global best practices as we invest in next-gen technology, whether we see across the globe, is about drive-through scanners and high-speed scanners, so that you are able to, on the move, be able to record some of these activities rather than having a dedicated container moving into a dedicated place. Lastly, but very critically, we again looked at certain global examples of saying, how do we ensure that the key issues of high quality images, issues of discussions and variations across zonal customs or ports, or in terms of debates on the images, etc., is taken care of. And we looked at global examples like South Korea and China, where they've been able to look at centralized AI image analytics center, which is able to draw out all the databases together at one place, make sure that all the aspects are standardized in that area. In line with those discussion points, ma'am, 4 key points came out. One is, as we develop, we need to look at a core 5-6 port ecosystem where majority of the containers are planned today. Develop an ecosystem roadmap of scanners, physical infrastructure, what needs to change, the digital backbone in which centralized AI system will be critical, and manpower and procurement norms as one package as a roadmap. Second, the National AI Image Analytics Center has to be driven as an institutional aspect, not just as a center itself, both at a central as well as zonal customs level, to be able to ensure that the scanners protocol are standardized across port and image analytics is there. BARC indigenous scanner is a great example, but how do we operationalize that? Vendor ecosystem, the local vendor ecosystems needs to be developed around that in terms of saying how we look at BARC and local partnerships to drive this indigenous scanner ecosystem in place. And ultimately, as we look at the forward-looking scanners, which are for procurement, high-speed scanners, the best practices which we have seen in say Rotterdam, Singapore, etc., in terms of whether it's high-speed scanners which can even on trains which can move around 20-30 kilometers and still scan at the right degree of analysis, need to be looked at as we go along. So those were some of the key points around this, ma'am. And moving on to the next area, which was on the customs integrated system. It's a great initiative. We are aware of how the journey has been in terms of amalgamating various systems into this one nation, one platform is what the panel came out with as an integrated platform. But the discussion centered around how do we really make it as a force multiplier. We now have ULIV, we are planning BharatNet, GSTN, of course, is there. The interoperability between all of these systems can really enhance the scale of what CIS is trying to achieve. And we have seen some of that in likes of Singapore, right, TradeNet, etc., where it is not just about the customs and the logistics ecosystem, but also the trader ecosystem coming together in that one platform. So as we design that, that will be a very critical element. AI, IoT, information, it's not going to be just about messaging and interaction, but how do we integrate AI and IoT device information as we develop the CIS from day one will be very critical. And last but not the least, the core layer, which is about standardization first, and then looking at digitization to ensure that whether it is the ports, each port ecosystem, dry ports, etc., the process is re-engineered to accommodate the right set of inputs which are CIS required. These were some of the areas, ma'am, which came out. We looked at saying that one nation, one platform is what CIS should look at. All of them together as an Indian digital corridor, trade corridor, which is CIS, ULIV, GSTN, and Bharat, how they can work together could be the next thought process or the vision which we could look at to make sure really enhance this this platform further. And while we discuss all of this, one of the key inputs which came through was, given that today's disparity of number of platforms, and in the future, all these platforms feeding together within CIS and others, security, cyber security, and privacy infrastructure will be at the core. So right from now, that planning around those elements, whether it is compliance with the local regulations, which are the India regulations on DPD or other activities, or global security standards, need to be forming part of this entire process as we develop the CIS. Moving on to the last slide. Thank you. On baggage clearance, it was discussed that it's a great aspect which has been announced in the budget, and actually has made India globally competitive with peers, both in developed and developing economies. In fact, in some, it's much higher than what it is. So the baseline is already set. What now remains is the real reform opportunity on periodic revisions. How do we look at it? And the panel discussed multiple aspects in terms of what the global best practices are. Some were like in Indonesia, which is about adjusted forex factor. So they are looking at USD as the dominated currency, so that while as the inflation adjusts and the rupee depreciates or the currency depreciates, you are still able to make sure that the value of that range remains at the similar level. Other examples are on CPI linked, etc., which could again be looked at. So those were two elements. Then also the discussion centered around how do you look at ease of doing business in terms of the declarations, etc. And some simple but key elements came out. For example, an Atithi 2.0, where it is not just about the app, but also about web-based, multiple languages. Today, it only exists in English. Family group submission, Singapore has that one person can submit it for the entire family, very critical in an environment like India, where people travel with families. Those could be elements which one could look at. And again, clearance first and then check by exception. The trust-based aspect of saying 95% of the people actually have nothing to declare. So how do I make sure that the systems are geared towards it? It could be as simple as saying that, can I have a user interface which is very simple, 2 clicks and I declare and I move out, so that the adoption increases. And ultimately, again, the vision of Atithi should be to move towards one passenger, one data journey. So I do not need to look at the data from immigration, whether it's a port collection, etc., or the customs. All of that kind of work together in a single flow, so that I don't have multiple variations as we go along. And then we are seeing examples of these again pan out in countries like Australia, etc. So those were some of the suggestions, ma'am, which came out during the panel discussions around these three aspects.
Thank you so much. Ma'am, that brings us to the end of the presentations. We can go back into a grid mode if you can change the view so that everyone can come back online. Ma'am, I would like to mention that while our joint secretaries helped in anchoring the discussions, it was the experts who put themselves there to help also engineer the greater response and to also make the presentations and suggestions for us. The presentations, if I may just add, ma'am, I think they were quite professionally done, tight to the point. And it was heartening to note that there was a focus on addressing policy and process related issues as well as some regulation related issues, together with how technology can be used across all three sub-themes. So we look forward to getting the detailed deliberations which took place from each of the three sub-panels. That brings us to the close of our webinar today, ma'am. I would be very grateful, and we are all looking forward to hearing your guidance and your remarks on this. May I please request you, ma'am?
Thank you, Anuradha. As we come to a close of today's post-budget webinar, let me begin by thanking all of you for your valuable contributions in helping shape a clear roadmap for implementing the budget announcements under the theme Technology, Reforms and Finance for Viksit Bharat. This has been the first webinar in our post-budget engagement series, and it has set the right tone. The discussions were thoughtful, practical, and solution-oriented, exactly what is required to translate budget announcements into outcomes on the ground. Our government actively encourages these kind of webinars because they provide a structured platform for industry and market leaders to share insights that help convert policy intent into reality. In this sense, today's deliberations align closely with the Honorable Prime Minister's vision of Viksit Bharat by 2047, a vision that emphasizes outcomes over outlays, delivery over declarations, and governance that is efficient, transparent, and citizen-centric. Across sessions, a clear message emerged. Stakeholders view the budget measures as a coherent framework to strengthen India's growth architecture through sustained public investment, deeper markets, greater private participation, and simpler compliance. As Honorable Prime Minister emphasized in his opening address this morning, post-budget webinars play a critical role in ensuring rapid and simple implementation of the budget announcements. The Honorable Prime Minister also underscored the need to monitor the impact of reforms through robust grievance redressal systems and suggested the development of a reform partnership charter, a shared resolve between government, industry, financial institutions, and the academia. Let me briefly highlight some key takeaways from today's discussions. In the sub-theme of boosting public capex, de-risking infrastructure, and banking for Viksit Bharat, the discussions highlighted the need to use public capex to crowd in greater private investment through better risk sharing, stronger project viability, and supportive policy frameworks. Participants emphasized that the proposed infrastructure risk guarantee fund should focus on project de-risking, while the high-level banking committee should help align the financial sector with the needs of a fast-growing economy. The proposed merger of the PFC and REC was also seen as a step towards creating a stronger institution for power sector financing, with careful attention to governance, of course, and integration. In the sub-theme of strengthening financial sector architecture and deepening capital markets, the stakeholders welcomed the proposed announcements as important steps towards improving capital mobilization and market depth. They emphasized that rateization of CPSE assets should focus on rent-generating assets with clear tax treatment and professional management, while FDI reform should provide greater flexibility, digital ease, and policy certainty. The expanded PIS route for individual PROIs was seen as a useful step for widening foreign participation, and participants also stressed the need to deepen the corporate bond market through stronger market making with incentive-based funding structure, better market infrastructure, and wider investor participation. The sub-theme of ease of living through tax reforms. Stakeholders emphasized that these measures should be implemented in a simple, clear, trust-based manner with rule-based systems, minimal discretion, and well-defined eligibility criteria. They also highlighted the need for procedural simplicity, careful calibration, and smooth transition planning so that compliance becomes easier, more predictable, and dispute-free, especially for small taxpayers. So thank you for going forward. The insights shared today will be consolidated into an outcome-oriented summary with clear action points, what needs to be done by whom and within what time framework. Where coordination across ministries, regulators, and institutions is required, we will ensure structured follow-up. I'm confident that today's discussions will help guide effective implementation of the budget announcements. If we maintain the spirit of constructive engagement and disciplined execution, we can ensure that reforms are not only announced, but experienced through better infrastructure, deeper markets, simpler compliance, and stronger institutions with wider opportunities. Every reform and every policy initiative must ultimately be aligned with our shared national objective, aiming to achieve the one vision of Viksit Bharat by 2047. I once again thank all the panelists, moderators, experts, and participants for your time and valuable contribution. We look forward to continuous engagement in the remaining sessions of this post-budget webinar series. Jai Hind.
Thank you so much, ma'am. Your words of guidance will help us to take forward the budget announcements pertaining to our ministries and the secretaries of the departments that are present today. And the same spirit will guide the further budget webinars that are to take place on March 3rd, 6th, and 9th, for which we will be actively working with the ministries. And once more, I would like to thank all the participants, panelists, and experts, as well as colleagues. Thank you so much, ma'am. With your guidance and with your permission, we can close the webinar today. Thank you.
Thank you.
Thank you, ma'am.
Thank you, ma'am. Thank you.
Thank you, Varun.
Thank you.
This meeting is no longer being recorded.
This webinar is being transcribed and summarized.
Your meeting has ended.